Today I'm going to talk about uh, recent changes in some of the ITF forms. Really, it is being prepared by one of my staff who is handling this thing. I'm just like I've gone through the presentation prepared by him and just dealing with that. And the other one is major changes in ITR forms, ITR return, ITR Act, IT-Act 23-24. This I've dealt with, I've prepared on my own. There are a few presentations already made by us in this week. One is on GST. The forthcoming would be on FEMA overview, FEMA, uh, qua individual, qua income tax, qua FEMA laws. What are the provisions you are supposed to follow, including TDS and TCS, which is going to be levied by the government? So this is how we're going to talk on that. I'm a past president of Visakha chapter Ahmedabad, though here written as president. And these are some of my degrees. Nowadays, we are focusing on creation of a wealth for India through knowledge base per our right ways. India is very talented, qua English speaking public, qua indisciplined public in terms of the way the Chinese people work very hard, laborious, but we do have a non-linear thinking that I want to take it to a best advantage of the world, because today it is an asset that we are proud to say that we are one of the we are the most populous country in the world, qua even age-wise also very demographically also very favorable. But this asset, this advantage should not be missed by any way. If we missed it, we missed it with a big margin. If we get it, we are getting with a good margin. Say a few years back, if you were going to see the Australian cricket, the one day and all these things, people were passionate about it. Nowadays, IPL is passionate about that. This is what is the strength of India. With this background, each and every individual has to work very hard to take our country to a different level. And only we can take our country to a different level, not a politician. Politician would work on their own. Let let them be benevolent to the people of India. But we as in citizen of India, those who are very educated should support India in a huge way. With this, we're going ahead with the other slide. So reception of changes in this common ITR, which I'm going to talk. First, previously government decided, Income Tax Department has decided that they would list in the form. There would only two form, one in 7 for one for charitable organization, and the other one, other than that one, the same form. They have given us the format also. The format was very well crafted, but with this some anyhow reason, government did not go with that, and government decided to go with the old form with few changes they have made it. So first form is form number idea 1, which would be applicable. They call it as a search form, which would be applicable for less than 50 lakh salary income. If you have income more than 50 lakh, it will not be applicable. You are resident, then only applicable. If you're resident, other than resident, not ordinary resident, but not non-resident, this form will not be applicable. If you have more than one house, this form number 1 would not be applicable, though you may have income from other sources. But if your agriculture is more than 5,000, this form will not be applicable. If you have a listed company, unlisted company share, or you are a director in some company, this form 1 will not be applicable. If you are a startup, you will be opting for ESOP, it will not be applicable. If you have withdrawn cash more than certain amount under section 194N, then this form would be applicable. This is regarding from ITR 1. Now I'm going to ITR 2, applicable to individual and HUF not having income from business or profession. So ITR 2 is for a person whose income is more than 50 lakhs and a salary income, but not a business income. Then ITR 2 for salary, ITR 1 and 2 not having a business income. And also, those individuals who cannot file ITR 1, they have to go for ITR 2. ITR 3 will be applicable. Those who doesn't applicable to individual and HUF having income from business or profession. So form number 3, ITR 1 and 2 for salary employee. Those who are business class, they have to go for ITR 3 or 4. Okay. Those previously the SSC was having present income were liable for Form 4 from assessment year 1991. This form can be filled only by resident, individual HUF and AOP whose total income up to rupees 50 lakh and has been an income. If your income is below 50 lakh, go for ITR 4 or presumptive taxation, go for this. If you are individual HUF and firm, you are liable to go for ITR 4. But but an individual is a director of company as investor equity share cannot file this return. ITR 4 is like ITR 1 and 2. ITR 4 is very sahaj form. For a business income below 50 lakh, 4480, resident individual HUF and partnership form. Other than an LLP, they have a separate form, Form 6. ITR 5 applicable to person other than individual HUF company. Person required to file ITR 7. Those who are having a charitable income, they will go for applicable to person ITR 7. Applicable to person including company required to file return under section 139 4A, B, C of this act. Applicable ITR 5, ITR 6 is applicable to company other than those claiming exemption under section 11. Section 11, you go for this thing. Amendment in forms notified in 10th February 2023. I have covered minor but an important notification, important highlight. I have made it. Okay. ITR 1, you have to give the mobile number, email ID. You have to give the address. Now, email ID has become a must. They have provided it 2 forms, email ID of an CA or ITR consultant or income tax practitioner or IT practitioner, and address. Fill the tick. You can file return under section 139(1), belated return under section 139(4). You can revise return, or you can file return under section 119(2)(b), a condonation of delay as provided by making a petition to the Commissioner of Income Tax. Now they've added 153C. What is a section 153C? If search and survey is conducted under section 132 or 132 of any other person, and who is in his books of account, any entry or money, bullion or jewelry or other valuable article of a person, of a other person found at the premises of the person who has been searched or surveyed under section 132A, 132 and 132A, then that person would be issued a notice under section 153C, and he would be also liable for reopening of assessment if the information which is collected under section 132, 132A is not available in that section. In that case, they have provided in all the forms 153C column. 139 defective return can be corrected. 142(1) notice has been issued, you file a return. 148 reopening assessment, or under section 153C you are supposed to file a revised return in response to the notices. They have provided a specific column also. Tier 1. This is you've been given an option under 115BAC. Are you filing a return under the old regime or new regime? If you don't mention anything, new regime is assumed. Are you filing a return under the seventh provision of 139(1), but otherwise you are not required to file a return? Suppose your income is you have used the credit card, you sponsor some person. So there are certain conditions on the basis of which, though you are not liable for tax, under section 139(1), certain prescribed things are provided. If you withdraw cash more than 2 lakh, these are the provision under which you are supposed to file a return. I'm not giving you the specific 7 provision, but you're not supposed to file a return, but you're filing a return under section 139(1), 7 proviso. To be filed is not required, but filing return of income fulfilling under condition. Have you been incurred expenditure of an amount, aggregate amount of is 2 lakh to a foreign travel for yourself or others? These are the part of condition as mentioned above. The previous form was for 139 ITR 1. This is one ITR 2. What form is applicable? ITR 1, 2, 3, 4, 5, 6, 7. We already discussed at the initial stage. But this is a column which is mentioned. Under ITR 1, ITR 2, they have provided that if you provide, you have to provide email ID of yourself also. Previously, the consultant were providing their email ID. But now here, you have to provide your own email ID. Okay, email address number 2. On or before due date, 139(4), revised, modified return, 92CD is addition on because of transfer price you are making an addition under section 192 CD. This will also be added here as an application of form 150C, 153C. I've already discussed. Are you opting for a new regime? This I've already discussed in our previous ITR 1 slide. Here only what is important is 92CD, which is an extra column added, which was not there because ITR 1 is applicable to even only salaried employee. Here, do you want to claim benefit under section 115H? Are you a Portuguese? Whether you file FII, FBI, you have to give the registration number. The form is so exclusive that only professional kind can file a return. 89A was claimed of any earlier years. In 89A is equal to when you are working in some other country and you're getting some income because of that. Then you have to provide the country and the year in which the deduction is claimed, and you can mention here. So 89A section is added. You go refer to a section, you have to provide the country code, the amount received. If you have more than one employer from which you have received, you can mention the name also. VDA. VDA is equal to cryptocurrency and other related assets as a virtual digital asset. This has been defined here. So any VDA asset would be liable for capital gain or business income. And the difference between cost price, if you have bought it on your own, then it would be under section 56(2)(10), the cost incurred by you. Or if you got a gift from some other person, the gift, the value on which you have paid a tax 56(2)(10), or if you have received from some other person on which you have not paid a gift tax, then the cost of the previous owner would be considered as the cost to the cost of VDA, the sales consideration received minus VDA will be considered as a cost of this. Either it would be a capital gain tax or it would be a business gain tax. So the forms are so exclusive, so compact. You don't have a power to manipulate anything. Here they have mentioned the VDA. So you don't have to declare the asset which you have it on the date on the date of filing return, but any date of acquisition, date of transfer, head under which it will be liable for tax. 56 to 10, I've already said consideration received, income either 6 minus 5, which would be added as an income from business income or under the head capital gain. These are very complex form as you see it, but it is like that. Short STCG may be liable at 15%, 30% at applicable rate or DTAA. LTCG at 10%, 20%, air at DTAA roll. Year cost minus this thing, and on the month or year in which a month, what I'm saying is like um, date on for the purpose of calculation of advance tax. Here the date is also given. This is complex. I don't go into that, but it will make you realize that the filing of form is not a bacha khel. And nowadays 15.6, 15 15.6, 15.6, 15.6, 15.6 to 59, 59 to 16 to 15 there. These are the 5 columns. Before 15 June, 15 to 59, 59 to 12, 15, 12 to 3, and before 16 to this thing. At the rate of 15%, 30%, at the maximum, at the rate at which you are liable for tax. DTAA same 10, 20 at the rate at which is take, and the more column is added is for VDA. VDA will be liable at 30%. Now I am into form number 3. Here also same thing. There is no change except 153C is added. Have you ever opted for new regime? If yes, please furnish. If yes is selected, please furnish assessment here. This is regarding IT-Act-3. Here also modified return for the purpose on the basis of computation made on the basis of transfer pricing provision. Nowadays, intraday is considered as a speculation gain. Whatever turnover you made, difference between suppose I bought a Reliance share for 1 lakh, I sold it for 90,000, minus 10,000 is my loss today. So minus 10,000 is my turnover of a day. And the same way is for this thing. That turnover, my whole profit made or loss made during the year. So I give you an example of 1 lakh minus 90,000. Oh, during the whole year, I made a turnover of Reliance of 1 crore. I made a profit, purchase price less 1 crore, 20 lakh. 20 lakh is my profit. So intraday minus plus equal to my turnover of a intraday and exit amount which I earned 1 crore minus 20 lakh. 1 crore may be plus or minus, both I have to add it is for the purpose of calculation the turnover. Clear? Yes, no? So nowadays, if you have a capital asset in the form of a shares, which can be either a capital asset. If it is a capital asset, it would be considered as STCG or LTCG. If it is a business asset, it would be considered as a business profit. It may be a share, and it may be a mutual fund or a combination of mutual in a debt fund. But if it is more than 50% is on equity, it would be considered as a business asset or a capital asset. But any F&O would be considered as a business income. 89A, which I already covered, there is a form details which you have to fill. There are 3 conditions: that country, amount, and the year. If there are more than one country, this thing you may be added. It may be in the form of a pension also. Nowadays, they have carved out what is your business profit as per profit account, carved out the speculative business which you have it. and show it as a business profit under section this schedule BP. So there would be income from business profession. Out of that, any speculation business or special specified business, there's a 44 EED or some whatever may be. For special provision, there are n number of specific business. In that, you remove that and you just have a plain and simple vanilla PGBP, profit from business and gain. So these are the way it has carved out things, so it become more simple. 115 BBF, 115 BBG, 115 BBH. Income received credit to profit account on the under the section 115 BBF, G and H. BBF is equal to patent, BBG is equal virtual asset, BBH is equal to I don't know, I forget it, okay. But this is the way BBH you can go for. The same with provision here is expenses debited to profit account, qua patent, qua virtual digital asset. And the other one, I need to go for it, okay. I should go to the this thing. Let me forget that I forgot it. Okay. Then I can concentrate on my next presentation. My memory is very short. I cannot remember so many things. But when it comes to system, I remember the way it should go. Now STCGC, STCG, DTAA, this thing, total short-term capital gain under this section. LTCG, DTAA, this income from virtual digital assets will be specifically shown separate. So there should be LTCG 10, 20 and DTAA. And for a period also, that would come to a total of long-term capital gain qua LTCG in total. It would be here. So these are for 1530 applicable rate, DTAA rate. Okay. And then it would be make a total on the basis of which computation would be made. These are the form in which you filled up, and there would be a whole they have made a whole presentation, whole calculus competition series there. Whole programming is there. It would give you a perfect result like this. Okay. Head income from VDA. This is a schedule of virtual digital asset. Virtual digital asset is not only equal to cryptocurrency, but there are many things that are involved. And government has banned cryptocurrency because government is planning to have their own cryptocurrency before the election mostly. I don't know, but it will come, and government RBI is very fancy about it. In the way India is going ahead, I don't think they will miss the chance to have their own cryptocurrency. Yeah, because it would be a government backing, it will work very good. And cryptocurrency, why crypto is very famous all around the world? Because of the advantage. There are certain advantages in crypto. There are certain disadvantages in crypto, but crypto is going to survive over a period of time. Head under which income to be taxed as business or capital gain under VDA. Either it should be a capital gain or it under the business income, which I already covered. You say date of acquisition, date of transfer, and head under which it will be taxable. A minus B 50/60, the cost of acquisition, cost of sale 6 minus 7, 7. 6 minus 5 is equal to 7. Profit from all positive income business, total income of positive. This is very A to G, B to C. These are the way it is taken. It's a very compact form made by the government. You can't say anything. ATIB is a business under certain circumstances would be liable exempt, but the condition is you have to file a return in time. ATIB is a provision by which any in respect undertaking begins commercial production or refining. So first is for commercial production or refining mineral oil. Deducts in respect of undertaking, developing and this thing. ITIB is for specific section. Undertaking 1, 2, 3 will be entitled to deduct one from other. It's not for Jammu Kashmir as shown here. ITR 5. ITR 5 is same. 153C is also included here. 115B, BF, which I've already said, BBF is equal to pattern, BBG is equal to, I said, what was that? Virtual digit asset 155 BBHH, I forget to know it, okay. Income from VDA, now if you look at the form, total gain, sum of the total gain, income from VDA, income charged under the head, capital gain. VDA would be in two forms. One would be capital gain and another would be business gain. Information of deduction. Okay, this is, we are discussing about the form which gives you what you need to, suppose if you are an SSE, you need to how to collect the details from SSE, and if you're SSE, how you need to provide the details to the CA so that he can file the return in a proper format. This we have already covered. Okay. So here date of acquisition, every form is there. If there is a space, we can file it, you can annex an annexer. But when you go to a software would provide everything. Set of carried for a year of capital losses in case of capital gain, excluding amount of D not chargeable to the DTAA. Set off of current year capital losses with current year capital gain. Exclude the amount under section 1 under the form A1 A9A and B12A which are not chargeable under DTAA. So short-term and long-term capital gain. Short-term asset, short-term loss cannot be adjusted against long-term, but long-term can be adjusted against short-term. Long-term, short-term, long-term. So capital gain, this you can use it, ITR 6. Here also 139A, 139.4, 139 revised return, modified return, 130 after the order of tribunal or court. This column is more added under section ITR 6. You are supposed to file a return as per the tribunal order in case of a company. Many times this happens. That's why this is a column added, because in case of a NCLT company doesn't file a return. 153C is still there. 139.9, 142.1. If you defective return, there would be a date and there would be a number. You can change it. Intraday is still applicable in case of company also. 155 BBG, BBH is here into the business. BBG, BGH item cost of this thing. Income for virtual digital asset, either in the form of short-term, either in the form of capital gain, short-term, long-term, or as a business income. It is covered here. Set of carried for losses, which I discussed earlier. Long-term versus short-term, carried for and set off. VDA is the same, which format is already there. These are the changes in form. These are the form. This is the format in which you need to submit the details. Qua special rate. You have to specify the amount. I'm not going into details of 194 LC, 194 LD, UTA transfer, or this thing, 115 PA, oh, A115A1 into bracket B, AB 115BC, GDR. These are the special provision which is applicable for these things which I have not covered. There was these are the form which was notified and been withdrawn. But if you look at the form, they've been well crafted. So I'm just going through this because sometimes, somewhere, or even that during the filing of return, this data you need to submit or in the form. So I'm going into that also right now. Presently, tax are required to furnish return in the ITR 1 to 7, depending upon the type of the person and nature of income. I am going to cover charitable organization. Charitable organization has become a tax planning route, or government is very harsh or very rigorous provision have been brought into for charitable organization. To run the charitable organization, it requires absolutely professional approach. You need to file a return because there are two concepts. One is application of fund, source of fund. This is one concept. Then there is a profit and loss account business and this thing. And what is the application of fund? There is one more concept is called corpus trust, corpus fund. The other concept is application of fund, source of fund. I'm not talking about one 13(1)(d), which is called a specific trust plus. If you don't provide for specific different books of account for specific purpose donation, they have to come a separate books of account. 100% donation, 15% you can carry for 5 years. You have to have an application of fund. Previously, it was allowed that if you borrow for the purpose of application of fund, it was allowed, carry forward application allowed. Now, if you have borrowed and suppose there is a hospital going off of say 50 crore, 10 crore is the corpus, 40 crore you borrowed, and now this borrowed will not be a part of consideration, but as soon as you make a payment of loan, it would be considered as an application of fund. That also you have to finish it within 5 years time. So charitable is really a very tough game. And further, if you don't file a return in time, if you don't apply this term, it would be considered as defunct, and whatever asset you generate over a year of time, it would be considered as a deemed income at the cost of market value in case of a land and building, and the other asset would be at the price. So, and it would be considered accreditation, and even directors or trustees are personally liable for this. So, I've gone in between this provision related to trust, which came into my mind because of ITR 7. Presently, taxpayers are required to furnish their income in ITR 1 to 7, depending on the type of person and the nature of income. Current ITRs are in the form of a designated form where taxpayers are mandatorily required to go through all the schedules, irrespective of the fact whether that particular schedule is applicable or not. This increases the time taken to file ITR, and in any case it can and may create avoidable difficulties. With a view to avoid such difficulties, CBDT has proposed to simplify the form, but simplification is withdrawn. It is expected to be applicable from 22-23 financial common online questionnaire basis form. I'm going to discuss questionnaire form here. It intends to smart design. According to CBDT, and ITR bring an ease of filing return. It intends to smart design the schedule in a user-friendly manner with a better arrangement of logical flow and increased scope of pre-filing. It will also facilitate the proper reconciliation of third-party data available in the IT department. Although the proposed single ITR is intended to streamline ITR filing process, thousands of tax may file difficult to file the frequent changes in return. But government cannot do. Government is doing their best to have a feedback and working. And it is always good to complain. But when you are become a, when I'd been abroad for a while, for a long time, and I'd seen Indian government, Indian system is not as bad as you thought of it. The taxpayers are currently required to read through every schedule when completing the return forms. This will take more time regardless of whether paying a new ITR form. This is scheme of proposed common ITR. They have said basic data A to E, schedule of calculated total income T1, schedule of competition to TT1, information of bank account and schedule on tax payment schedule TXP. We are going to discuss this also because that will help you to understand, because these are nothing but a form which you are filing. Only thing you are competing, they're taking a different way, and it becomes easier if this is a way they have chosen to do that. But as it may be, we have to deal with the situation as it right now. Basic A to E, the schedule of competition part A. First, you decide the assessment year. Then you decide the PAN number. PAN number you don't have to, you have to have only one PAN number, Aadhaar, name. If there is any change name, old name, new name to be mentioned, address of the taxpayer, personal type, whether AOP, firm, LLP, company, date of birth or incorporation, date of commencement of setting up a business. You need to mention part C, resident status. There are three status: resident, ordinary resident, resident but not resident, and non-resident. These are the way these things are. Part D, section under which ITR being filed, 143 to 1, which I mentioned in the form also. Now it has been implemented here only. If it is a revised or modified, it's in the original return number, date of filing. If you've been filed on the basis of notice issued under section 139(9), 142, 148A, or the order 1192B, unique number, document identification number, date of advance rolling, 92CD. This is regarding transfer pricing. Whether you are a resident of a country or a specified territory with which India has an agreement with 90A, or central government has adopted any agreement 91, your income should be a part of whether DT is applicable to or not, whether you have any exempt income under Income Tax Act. Yes, if you have an exempt income, you have to mention, say, for example, PPA, ADIA, ATIC, HHC, whatever may be, which, no, that will not be a part of, that will be a part of deduction. Which head of income applicable to you? What are the heads? Whether income from house property, income from business income, salary income, capital gain income from other sources. These are 44 AD, AD, BBBB. If this is a provision where presumptive taxation is applicable, you can write down here. Here you have to carve out from your profit loss account. These are the things which need not be a part of your taxable income. Whether if yours, whether you have income under the head profit of PGBP other than E4, which I've already mentioned, then comes whether the income or any other person is included in your income under chapter 5, whether you have any income chargeable to tax at a special rate. There was a chart which was here, there you have to fill a whole chart. Here you have to mention only section applicable to you. And if you say no, you don't have to go into details. So because if this new form introduced, there would be, if yes, no, you don't have to fill the other things. If you have to yes, you have to go into details. So that would be a very easier one. And government has decided to remove the old regime sooner or later. They're going to go for a new regime only. Whether you have any brought forward losses on absorbed depreciation or allowance under section 35(4), any unabsorbed depreciation as capital gain, business or STCG, LTCG. There are a number of business care for losses. You can say depreciation, unabsorbed depreciation, unabsorbed loss. Whether any deduction under chapter 6A, whether you are eligible for section 10AA. 10AA is now allowed only if you file a return in time and your money is come back in India within 6 months time, or with the extended time provided by the RBI. Whether you are required to maintain books of account, whether you are liable to for audit under section 44A, if answer to E2 is answer, whether during the year's total sales, total turnover, gross receipt of business exceed 1 crore, whether you're liable for audit under section 92E, 92 is equal to transfer pricing, whether you're liable for audit under any other section of the income of the tax, whether you're liable to audit under the income other than Income Tax Act. Suppose you're liable for GST audit, You have to mention here. If you're liable for tech cost audit, you have to mention here. If you're liable for company audit, whether you're liable to maintain books of account in the India's applicable to companies, whether you were a director in a company during the previous year. If yes, you need to mention the company in which you are a director. Whether you hold any unlisted company share at any time during the previous year. If yes, mention it. Whether your investment in partnership of unincorporated entity, details of non-resident relating to non-resident, whether you have business connection in India. So now you have to mention whether you have business connection in India, whether you have a P in India. Because if you have a P in India, there are certain income which are liable for tax in India also. Now P concept has gone for a lot of modification. So even Google has to pay tax. There are certain specified rates are provided on the basis of turnover basis. They pay tax directly without going into P concept. It's like whether you are exercising officer a special rate in case of 155 BAC, 115 BA, BBA, BAC, BAD, the current previous year, the exercise option for taxation, whether you have to claim benefit under 115 H. This is a special provision by which you are liable when you become non-resident and choose to become resident. You are exempt for financial cost of asset benefit, which is for these things. You have to mention during the at the time of filing return that these are your financial asset which you brought it from abroad when you become choose to become a resident. IFSC in device of income solely into convertible foreign exchange, whether you are a startup company as DPIT, whether you are FIP, FIPI, there are specific provisions for gift city and export to SEZ. Whether you are FII, FPI, whether you're liable for the represent, including Section 160. This is a form which I'm saying not applicable, but once you go through this form, it becomes easy for you to how to collect the data from client when you file the return. Whether you are a company under the liquidation. So there are many companies which it goes on to the liquidation. It takes time for them to file a return because there are a lot of data and there are a lot of provision is there. Liquidity is appointed, DRP is appointed. There are a lot of provision and India is going through sea changes in the field of this. Whether you have income from outside Indian tax rate has to be claimed. Suppose you have a tax paid in a foreign country, your income is there, you make it DTAA, you may be entitled for tax paid by them, even if there is no provision between DTAA or any provision. Still, income is added. Your tax paid is added to the income, Indian income, and there would be average rate would be taken, and you would be liable for tax accordingly. And you will be able to get a deduction for that also in case of income on outside India. Whether you have any foreign asset, hold, beneficial owner, beneficiary other asset, including financial interest in any, whether you're exercising option under section 92 CEA 2A, whether you are registered under GST, you have to mention GST. If yes, your turnover as per GST, your GST credit, IEC, whatever credit you have to compare with the books of account. Whether you're governed by provisional code, this is a special provision, whether you're a domestic company, whether your turnover exceeds 400 crore, there's a different provision. Whether you're a listed company, whether you're a private limited company, you're a backup, what a buyback share. If you're a buyback share, you are liable for a tax according to the reverse charge mechanism. Now these are the provision. Now these are the details. On the basis of that, you have to fill what is your income from salary, house property, profit and gain, capital gain, income from other sources. Total A1 to 5. 1 second. current year losses to set off balance. नीरव विषय एक कोई इको आवे છે જો ને इको बंद करे. Capital gain income from other sources, total of head-wise income, current year losses, balance after set of losses, brought forward losses. These are the form gross total income deduction, the chapter 6A, 10AA. Now I'm again back. Balance after set of current year brought forward losses to be set off against T1, deduction under the chapter 6A, deduction the 10AA income chargeable to tax at special rate. Okay, I'm just coming. Okay. Income chargeable tax at special rate, income chargeable tax at normal rate, net agriculture income, aggregate total income plus aggregate income, loss of current year carry forward, deemed total income under section 115JB, JC, tax payable on the deemed income under 115JB, JC. JC means 18% of this surcharge, health education, tax at normal rate, special rate. These are the, say, I'm not going into details, but it will help to decide the refund amount will be computed. You have to provide the bank details, name of the branch in which your refund will be directed. And now in case of a non-resident, there is a SWIFT code so that even your money is directly transferred to your NRO account. A schedule of tax payment is provided. So BSR code, date of deposit, serial number. एक सेकेंड ना. Hello, I'm with you. एक सेकेंड ना. I'm back. 1 minute. 1 second, I'm back with you here. Okay. The ITR is customized. एक second ना. Yes, sir, I'm with you. Hello, I'm with you. 1 second. આ છે ને આનું પેલું એ ચાલતું લાગે છે કોકમાં. અને તારો આ અવાજ જ છે નહીં એની વાત. તારો અવાજ સંભળાય છે એ અવાજ બંધ કરી દે. I'm with you now. Okay. I'm very fussy about the noise, but okay, I'm back with you. I liked. નીરવ 7:30 મને બંધ કરવાનું કહી દે. 7:30. Hello, I'm with you. Okay, these are the details which need to be filed so that at the time of refund, it will be directly dispatched. This is not a very, I don't want to go detail because it is automatic, not very worthy to be noted for it. Now as the ITR is customized, the expert with the applicable schedule based on certain questions answered by the taxpayer. The questions have been designed in such a manner and the order that if the answer to any question is no, the other question link will not be shown to him. What is the advantage of this form which have been published by the department? Instructions have been added to assist the filing of the written contains a direction regarding the applicable schedules. The proposed IT has been designed in such a manner that each row contains one distinct value only. This will simplify the return filing process. Some of the return filing process right now under section under the 143(1) intimation is sometimes so tedious. One mistake, it makes the whole thing very clumsy. The utility for ITR will be rolled out in such a manner that only applicable field of the schedule will be visible whenever necessary. The set of the field appear more than once. For example, in case of more than one house property, schedule SP will be repeated. Similarly, where taxpayer has capital gain, sale of set taxable under only applicable field for capital gain would be open. This is a benevolent provision. This is a very good form in other way. As evident from the above, taxpayer is required to answer questions which apply to him and fill the schedule linked to those questions. Where the answer is yes, given as yes, the result of time and energy will be saved, and he will be relieved for additional burden of going through all the part of ITR. Suppose I don't have a VDA. Once I say I don't have a VDA, the whole form will not be open. If I say I don't have a capital gain, it will not be open. I said I don't have any income from other sources. I have a TDS. I have no TDS. I have paid advance tax, BSR code. I don't have DTAA. So this will be a huge advantage because it becomes simplified. With this, I have discussed in cracks most of the provision related to new form. Once you go on filing the return, the issue will crop up. As the issue crop up, just call on me. I'll be there to guide you for a problem which arises in that form. Okay, just mobile me, just WhatsApp me 9825804094, and my email ID is nitinampathak@gmail.com. I'll be there to answer the query related to this ITR form. If I know it, I'll answer it. Please choose not to call me. Just email me and WhatsApp me. I like to answer all that query when I'm comfortable. With this, I'm going to this income tax provision. I may not be able to complete the whole because I want to complete at 7:35 because it is a 1 hour talk. And then I'll go for whatever left. I'm going to cover next week on the FEMA overview. I'll be taking a call on that day, and I would complete the rest in the period of to come. As the charitable organization is a really big headache, I'm going to specifically talk on charitable organization in the next my talk. With this, I'm going for a provision for financial year 2020, a new act which has come into provision. I'm going to discuss that also now. Application by charitable for the corpus of trust loans borrowing, which I've already covered in my talk. The government has provided. Here I have an example on this. Let me talk on that only. A voluntary contribution made for the specific. Let me go through this also. Applicable application by charitable register for a corpus of loan borrowing shall be allowed when such amount is deposited back or invested in the corpus of the loan or borrowing repaid within a period of 5 years. Suppose I'm a charitable organization. My trust name is ABC charitable organization. I'm planning a college. I've invested 50 crore, but 10 lakh is a corpus. 40 lakh I borrowed from a bank, and I prepared a college. I invested 50 crore, but for the purpose of application, only 10 crore would be considered, and 40 crore would be considered as a loan. As soon as I repay loan, it would be considered as an application. But if I don't pay loan within a period of 5 years, it would be considered as application, and I have to pay tax on 40 lakh out of the income which I earned from the college activity. So this would be a harsh provision. If they have introduced the repayment provision for a period of 10 years, it would have been a benign one. But government says we can't take a track record when you borrow, when you paid it. So to shorten this thing, they have introduced this term.
A contribution made with a specific object shall be exempt to the corporate. Suppose I made a donation for college, I made a donation for poor people, I made a donation for elder people, I made a donation for blind school people, I made a donation for disabled people. So I have to have a different purpose contribution, specific written submission by the donor that my this fund should be used for this purpose only. Then I have to make a specific corpus. I have to open a specific account. I have to make a specific investment. I cannot merge with these two, and because of that, I have to pay tax qua this thing. And if the corpus return needs to be filed in the time and no cash payment, TDS needs to be deducted for the condition continuation of this charitable organization. You have to file a return in time. You don't have to make any cash payment. TDS needs to be deducted, and no payment should be made to relative under section 13(3) or to the trustee. Donation to other trust. Previously, what was being done? I have rupees 10 crore. I have got a surplus of 5 crore, which I'm supposed to utilize for a period of 5 years. I make a trust donation, make transfer to the other trust. That trust will continue the benefit, but now says here that not the time period is also limited, but if a trust give a trust to a charitable trust, give a donation to B charitable trust, 100 rupees, then that trust would be entitled for 85% because that was the crux of the issue. Now from 1/4/2023, a trust gives a donation of 1 crore to B, B will be entitled for even A would be entitled for 85 lakh only, because 15% would be deducted, because 15% is the margin which they have quoted. Now, for the purpose of filing a return, they have specified three different provisions. You have to file a form number 9A and 10 and 30 before 31st March, August. 31st due date of filing return is 30th September. You have to file an audit before 30th September 2023, and you have to file a return by 31st October 2023. So there would be three different rates. The due date of filing return 9 and 10 is advanced by 2 months. They are supposed to file before 31st August. The due date of filing return. If they are not filed within the due date time, they will not get the benefit of accumulation, as a result of which will be subject to, for example, assessment 24/25. The due date for filing return is 31st October, and the due date for filing return is 9A, 31st July, and the rationale behind the advance payment of due is okay, 30th September 2023. Majority of the trusts are managed by the trustees themselves. As per the statute of, they are not going to be eligible to get a salary in as much as honorary pay and burdening with them unnecessary compliance. But this is the law of the land, and time provided by furnishing return, the claiming exemption is same. So there are two schemes under section 1023C and section 10, section 11, 12, 13, 13 this thing. So these are the way the scheme are. So the time provided for foreign return of for claiming exemption by trust institution under 1023C 111(12) shall not include the time provided by foreign return. In other words, the exemption shall be allowed if the return of income is furnished within time allowed under 139(1), 139(4), 139E, and not as Jawaharlal Nehru. These trusts are being removed. If you don't file a return in time, under section 139 or 134, you will not be entitled for claiming exemption under the trust. This is a draconian provision. Today, there are two types of provision temporary and provisional. They say that provisional, temporary provision be removed. Those who have submitted false information, incorrect information, insufficient, resulting in a certificate given through auto mode, they will be asked to submit the details, otherwise they will be removed for the even provisional registration. So now onward, you have to apply for onward. There won't be any provision for provisional registration. 115TD registration of a trust credit income. What they're saying now, previously, suppose I have credit trust in 1943. for rupees 5,000. Today its excess is worth 5,000 crore. If I don't continue to apply and get the registration on the date of not application, on the date of revocation and the date of not application of trust, it would be considered as an income. It would be liable for tax as accreditation. The difference between the cost price and the sale price or market value. So the land and building, it will be at a market price, and whatever asset which you have, is there will be valuation, and the basis of that there will be a tax. The date on which a revocation is or is the date on which the expiration of filing return, filing for an application, or your application is rejected on the date of rejection, it would be added to accreditation and tax would be level. And the trustee themselves are liable personally for this thing. Okay, these are the way this provision is crafted. Or now there were certain law on the basis of which the judgment is made, and now they're supposed to file a return, supposed to apply afresh under section 1046A. This is a benevolent provision. Now I'm not going into detail the other section which is there, but I'm just carrying on in a second, which I'll cover it later on. This is over. Personal tax rate has been changed. This is 150 new versus old regime. So deeming like 44 AD time level, the क्या बोलते हैं इसको, नीचे of threshold limit for 3 crore increase to 3 crore, 2 crore 575, presumptive taxation 50% or 8%, whatever may be 6 and 8 has been limited, but the condition is 95%. Turnover limit of audit has been increased to 10 crore. But the 43B MSME needs to make a payment. I'll cover this later on. Above payment of rupees 5 lakh liable for tax from 1st 4 2023. Life insurance premium 15%, cooperative society 4054 is limited to 10 crore. Beyond that, you will not be entitled for overseas package. You are liable for TDS, which I'll take in the marketing insurance, security, marketing derivative. TDS rate has been listed of debenture has been removed.
The difference between listed and non-listed debenture, you have to deduct TDS. Tax treaty, where there is a tax treaty, 20% rate should be applicable. Extending the provision of not a gift. Gift has been included. Previously, it was not ordinary resident, but not ordinary was not considered. But now they are also included. Prevention of double deduction in the form of 26, chapter 6A24 and capital gain tax has been removed. Intangible asset is worth liable for tax. Other proposed amendment. I will take in the next lecture. I'm right now finishing. Agreed completion EEE. The government has made a provision by which certain trainings are given to soldiers, and they've been with the specific provision has been made. Certain deduction is made EEE. Those who are Agnivir, those who are joining army, military base, they are given a special scheme. Some of the provision has been withdrawn. NBFC have been given a power to do this 35D special form needs to be JDA, any cash paid extra would be entitled for this. Need winning from lottery या तो जो बोलते हैं कि अभी जो क्या बोलते हैं धन धनानंद जीतो में जो भी 30% जो भी लगता है whatever money invested by you, difference is 30% is taxable. Net accumulated balance, proceed from TDS and TDS. I don't want to take it right now because search and survey provision has been changed. Some of the provision transfers of gold into this. I'll take all this later on. Okay, with this, I come to the end of my presentation, and I'll assure you we are going to take few more lectures in the next is at that time. Anything else you want to cover, I'll cover it here. With this, I end my presentation of today for 1 hour. Any question, any query, just tell me. nitinmpathak@gmail.com. My mobile number is 9825804094. Our next presentation is on FEMA, which is on 28th, same time 6:30. And all our presentations are available on blog. You can come and check it. Anyone who wants to ask a question, I allow you to unmute yourself and you can ask me a question. With this, I think I should close this session. Thank you very much. Stop recording.